All right, for those of you joining, thank you. We appreciate you being with us today to discuss the basics of down payment assistance programs. We're going to be talking about what these programs have in common, how they are different, what you need to know to start conversations about down payment assistance programs without having to be a program expert. My name's Will Medina. I'm part of our DPR team. With us today, we also have Keith Futrell, one of our DPA program specialists, Tracy Hacker, our customer success manager, and Lori Johnson, our customer success specialist and A team. I'm telling you. They will be answering questions in the background, so we ask that you feel free to use the Zoom Q&A feature to engage with them, ask questions as we go. And just as a quick note, today's recording of the webinar will be shared with everyone. So we always like to start off with a little bio. The down payment resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer assistance programs. So down payment resource stepped in and developed an easier way to connect eligible borrowers with hard to find resources like DPAs, grants, mortgage credit certificates, and other forms of homebuyer assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and better understand the down payment solutions that are out there for your buyers. We like to say that ultimately we are here to help you connect home buyers to the down payment help that they need. So today, as mentioned, we will be discussing the basics of homebuyer assistance programs. We're talking loans, grants, tax credits, and other forms of homebuyer assistance that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise been able to. So let's take a look at the current state of homebuyer assistance programs. And shout out to the team for this really cool infographic. I feel like it gets better every quarter. It's a great one. Of all the homebuyer assistance programs out there, 74% are some sort of down payment or closing cost assistance. We like to say that that's really a catch-all category, and we'll certainly be digging deeper into these programs in a few minutes. But it's important to note that not all DPAs are the same. For example, 80% have what we call deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are considered forgivable, either partially or fully, essentially becoming a grant over time. And 51% are both deferred and forgivable. And then there are still other forms of homebuyer assistance that are true grants at closing or are repayable monthly after closing. We'll be exploring each program type in more detail, as well as the affordable first mortgage and tax credits or mortgage credit certificates, as I mentioned, in a moment. Now, we always get asked where these programs are located. And the easiest answer and the factual one is that these programs are everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other form of homebuyer assistance. We also get asked about administration of these programs, right? Who funds these programs? So I just mentioned that every state has at least one housing finance agency. We're also talking city and county governments that often have community or economic development departments, housing authorities, right? There are a number of nonprofits like NeighborWorks and Neighborhood Housing Services and others that operate in markets across the country with varying programs. You also have many employers, such as municipal governments, hospitals, universities that themselves offer, right, some form of homebuyer assistance to their employees. Then you have community action agencies, community land trusts, and so many other organizations that are all out there trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So we've taken a look at the state of homebuyer assistance programs, where these programs are located, who offers them. We also like to talk about trends. Okay. Demand for these programs remains at an all-time high. Providers are still increasing assistance amounts, um, income limits, purchase price limits to continue to help more buyers in today's markets. And there are new state and local programs that continue to launch in markets across the country. And approximately 80% of all DPAs are funded and available. So we say this confidently: down payment assistance programs are available and are not going away. We also back a lot of this with some of the research that we do. And one of our important publications is the Quarterly Homeownership Program Index Report, which, as of this last quarter, Q3, showed a continued growth in the number of available and funded homebuyer assistance programs, right? 70 programs were added last quarter for a total of over 2,600 programs, which is the highest number of programs DPR has recorded. More programs are coming to markets all over the country, which means that it is offering you more opportunities to help new buyers. In that same report, we also noted growth in affordability in the following areas. We're talking programs with no income limit requirements, programs that are supporting first generation home buyers, and programs that are offering incentives to specific demographic groups. What are we talking about? We're talking about an example: educators, veterans, first responders. We also continue to report on assistance programs that expand the inventory options for home buyers, which include support for manufactured housing and 2 to 4 unit properties. Of course, the caveat for 2 to 4 unit properties being that one of those units must be owner occupied. And just since the last quarter, there's been a 5% increase in programs that allow manufactured housing and a 6% increase in programs that support multifamily purchases. Now, all of these programs share some basic universal requirements. As an example, they are only for occupant buyers. These are not for vacation homes or investment properties, although, as mentioned, in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they occupy one of those units. Now, all these programs still require some minimal investment from the buyer to keep a little skin in the game, as they say. This investment, of course, can take the form of a monetary investment, which may range from 500 to 1,000 or maybe more, sometimes based off of a percentage of the purchase price. The buyers are also investing time, right, by completing their home buyer education requirement, which is typically required to qualify for a down payment assistance program. And of course, these are not cash buyers. We are speaking about home buyers financing their home with a mortgage, so they must qualify for a mortgage as well. Now, taking those universal requirements in mind, let's now take a look at the 3 most common types of homebuyer programs and what's unique about each of them. The 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and the mortgage credit certificate. There are variations and certainly many other names for each type of program. We've seen them, right? DPAs, DAPs, homebuyer assistance. And that's what will help clarify as we learn how each one works. And remember that as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so that you can better understand at a glance what your options are. So let's begin with down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who themselves offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So, breaking these down, we like to start off with grants, which are considered gifts that do not have to be repaid. Repayable second mortgage programs can also be called repayable seconds, which are funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. We've got deferred or silent seconds, where repayment of the original amount is postponed until one of several events occurs, which commonly is when the borrower sells the property, refinances, or there's a change in occupancy. Of course, another caveat, there are some programs that allow for rate and term refinance, not cash out refis. And then you have forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, this is broken down as a percentage of the loan being forgiven each year for a predefined number of years. Just a quick example, it's common for a forgivable DPA to be forgiven 20% per year over 5 years. Often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as escrow expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses are to help the homebuyers shed the costs of purchasing and financing a new home. And we're still seeing more programs allow their funds to be used for temporary or even permanent interest rate buydowns. Now, one of the most common misconceptions about down payment programs is that the buyer must be a first time homebuyer. In fact, out of the over 2,600 programs across the country maintained a down payment resource, 40% of them have no first time homebuyer requirement. Beyond that, most programs adhere to HUD's definition of a first time homebuyer, which effectively states that you're a first time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to the rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive that first time homebuyer requirement in targeted areas, or they make exceptions for veterans or even certain professions, or may not have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and help pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest free, payment free gifts to buyers who meet the eligibility requirements. Now, as mentioned, they are not all the same. So others may bear interest, but they defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So let's take an example. Many programs stipulate that the buyer occupy the property for a certain number of years. Let's say that ranges from 3 to 10 because it can. And then the lien is forgiven, which means it essentially becomes a grant. And for those programs that are not grants, many will take second or third lien position to allow for layering of the assistance programs. So, what are the eligibility requirements? Well, we found that most have the following limits. Eligibility does depend on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, right? The average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, and sometimes even higher, which can creep into six-figure income limits in many cities. These programs typically have sales price limits as well, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. Now, the location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance across the state, covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have a more needs-based eligibility criteria that does involve an evaluation of each buyer's scenario and assistance needs by the program administrator. So most programs, as an example, will mirror first mortgage requirements, requiring a FICO score of 620 or higher. Homeownership history makes a big difference as well. Many programs are only for first-time home buyers, but as we mentioned, there are many for repeat buyers or even current owners as well. And remember, a first-time home buyer is simply someone who has not owned in the last 3 years. Now, I will be expanding on eligibility as it pertains to military service and certain professions momentarily, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying costs for a buyer and expedite their timeline by offering down payment or closing cost that helps enable a buyer to reduce their out-of-pocket expenses and retain some of their savings. As an example, think about someone obtaining FHA financing, right? They've got to put 3.5% down. If a DPA program helps them bring more to the table, thus qualifying for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage, right, has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. And we see that when you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it decreases the purchasing power of buyers' income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to put back right into savings, which has been shown to improve default rates. Now, many down payment assistance programs require the buyer complete a homebuyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and ultimately hit the ground running as more competitive and informed shoppers. And most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful homeowners down the road. We see that default rates are significantly lower when homebuyer education is completed before closing. So now let's take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage both offer reduced mortgage insurance, we're talking below a standard conventional product, all with a higher LTV. And you can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those same housing finance agencies. Now, affordable first mortgages help further reduce the cost of homeownership for new buyers through lowering monthly payments through the use of lower rates or mortgage insurance pricing. All that helps increase the purchasing power of each buyer and can potentially expedite homeownership for them. And as we like to say, getting them into a home sooner than they would have otherwise been able to. So now let's take a look at the third of the most common homebuyer programs, the Mortgage Credit Certificate, or as it's also shown, MCC. The Mortgage Credit Certificate is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there is one in your market, you should take a look. They are a great benefit for home buyers. The MCC offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The tax credit helps offset part of the mortgage interest costs, and you still get to deduct the rest of the mortgage interest paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some providers will also reissue an MCC through a future refinance. So let's take a look at an example of how the MCC works. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. So they paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 in this example, but the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. We love our case studies here. Here we have a collaboration with Loan Depot, and it details the success the originator, Mose Gatling, has had engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering a Nevada Rural Housing Authority program, two of them actually, a down payment assistance program and a mortgage credit certificate, if conditions permit, of course. And the example basically depicts the potential savings when exploring affordable mortgage solutions for home buyers. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement, the assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, census tracts, or sometimes even entire counties. There are also special programs available in many markets that target certain professions. We're talking typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can access an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or the term protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first time homebuyer requirement for veterans. Some offer higher assistance amounts as well. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite their homeownership history. And some of these programs offer the same or similar incentives to active military and guard or reserves members. So Now that we've given you all of this DPA information, right, we certainly want you to know how to access all of these programs once you leave this webinar. So I'll be showing you a number of ways that you can access DPA info and start to enhance your marketing. Anyone on this call can go to downpaymentresource.com and run an eligibility search for free anywhere in the country to see what's out there for you or your client. And if you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through our MLS partners. So we ask that you check out DPR, let your clients know what's available, and talk to your lending partners about which programs they may offer. And of course, let us know if you have any questions along the way. We are continuing to onboard MLSs across the country, and several more will be launching DPR in the coming weeks. So if you're a member of one of the partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. Click it, and we will tell you or your client which programs are available for properties they like the most. Now, we mentioned Down Payment Connect. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you as well, which allows you to control which programs consumers see so that you are better aligned with the product offerings within your company. So at this point, you're asking, what is Down Payment Connect? Well, Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and across your social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and help educate them on these available opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 14,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss best practices with DPAs, first-time home buyers, working with lenders, learning from one another, marketing ideas, so much more. You can listen in and learn or participate in the dialogue and engage with your peers. And we've also found and have seen that it's a great place to network and connect with loan officers that themselves offer DPAs within your market. So we always like to leave with a case study that helps illustrate how important DPA info is for real estate agents and especially for home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So she stepped in, learned all about down payment assistance programs, which helped build her business serving those same homebuyers. Like Amber's clients, DPA customers become customers for life. So we insist that you help tell their story because by helping them, they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. We've also put up our website, downpaymentresource.com, that also provides additional information about our tools, our homeownership program index report that we went over today, as well as other educational opportunities like upcoming webinars or blogs. And if there are any additional questions, we will be sticking around for a few extra minutes to help answer them. So we certainly appreciate you all. Um, I'll turn to the team now. Are there any specific questions coming through that we should be discussing?
Hey, Will.
Yes.
Hey,
Thank you.
this is Keith. Hey, I just wanted to touch on some questions
Yes, sir.
that came across the chat. One of them was regarding lenders or mortgage brokers or whatever. And I just wanted to say on that note that some programs allow brokers to work them, and some require you to close in your own name, which is gonna exclude brokers. Another question, but some do allow brokers. Another
Mhm,
question was citizenship, and of course, we're tracking that.
mhm.
And I would say a good portion of the programs that I'm seeing, at least, and I'm not sure about yourself, but or allowing for permanent and even some non-permanent, along with U.S. citizens. And I was trying to think, there was one other that I was um, uh, I know you probably even covered some of this, but I saw come through the Q&A. But
Thank you, Keith. Let's see here.
Hi, I
We
just wanted
will,
to let everybody
yeah,
know I've had a couple of questions in the chat, and we're trying to get to all of them on the Q&A. But we are sending out a copy of the deck and a recording to everyone that's attending that registered. So just give it a few days. It usually takes a few days to get them out to everybody.
thank you, Lori. I see the top question here within the Q&A chat. Is there any link that should be used to register on to qualify as a realtor on this program? If you are an MLS partner, this tool is already integrated within your MLS. If you're interested in Down Payment Connect, I'm not sure we can put up a link in there, but if you go to downpaymentresource.com and you look Down Payment Connect, we'll give you a brief breakdown of just how to subscribe for that tool, right? What are some of the services that come along with that tool? We certainly appreciate the question. A copy of the presentation will be sent out to everyone registered today. We certainly appreciate that question as well. Um, how can this be added to our listing on the MLS? That is a wonderful thing. If you are a part of one of our MLS partners, it's actually done for you every night. So let's say you input a listing today. By tomorrow, that listing should be flagged if based on its criteria, it qualifies for some form of home buyer assistance program. So nothing on your end other than, just checking out the feature. But great, great, great question. With respect to the subscription fee, if you are not an MLS member, there is a subscription fee to use Down Payment Connect. With respect to the agents that are part of the MLS, this tool, is included. Oh, wow, yes, a lot of great questions today. Thank you, thank you. There was one question I can see in the chat. Can DPA be used to pay commissions? That is still a question that we are exploring. We are still seeing a limited number of programs that may offer that as an eligible use of funds, and we obviously mark that if they do. Can the buyer apply themselves through the Down Payment Connect website? The link is available for you if there's an application link to provide it to them. In many cases, the program provider will want to meet with the home buyer, right? Or they might ask that they meet with a HUD housing counselor. And so that's the way that they'll be applying sometimes for the home buyer assistance program. If the property is a FSBO, can down payment assistance apply or work? I don't specifically see where that might be an issue. Does the team have anything on that? I guess if it's restricted by the program provider, but I don't believe there might be an issue there.
I think that would be program specific, Will, but
Right.
I think
Okay.
a lot of them do allow. And I also remembered, and I just answered a question on
Oh, yes.
Q&A. It was about stacking the DPAs, and of course, that's highly encouraged. Anytime that it is allowed, we encourage you to look into stacking them, whether it be a state with a local or with the community loan pool, you know, just as much as you can stack them, because that's just leveraging your customers and your buyer even better.
Absolutely. Absolutely. Thank you, Keith. That's a very important point to make in terms of the ability to stack these programs. I see another question regarding foreclosures or bank-owned REOs. It kind of gets back to Keith's point. That's program specific. They carefully outline what properties are eligible to be used with these programs. So it would depend on the program whether or not DPA could be used to purchase a foreclosure or REO. Do most banks participate in all of these sources, or should they just go to a mortgage company? That again is pretty specific. The programs that we have listed on our directory are really all nonprofits, city owned. If there's a specific program that a bank is managing, that's something where you would have to go and speak with the bank themselves. But if you're talking about an independent mortgage bank, a lot of them do uh, generate loans using some of these programs. But yes, I would always start with the lender as a resource and see what they have to offer you, right? Like what are they used to using? Where did I hear HUD would not allow DPA to pay for realtor fees? Please confirm and clarify. Um, I don't know specifically what the current rule is, especially being that the government has been shut down for some time. So I'm not sure if there's been any work done on that back end. What we can tell you is based on the programs that we track, if those funds can be used to pay for a real estate commission, we will clearly outline that. And as I mentioned, unfortunately, it's still far and few in between. I think it's still something that all parties are working through. Um, I have a couple that are police and a nurse. Would they be able to qualify on both sides? I know you said something about stacking. That is a great question. I hate to say that that would certainly be program specific. I don't know if it's a requirement for only one in the household to be, or it can be multiple in the household. Um, but it would certainly be worth reaching out to an organization that offers DPA to a targeted demographic, and then ask them about being able to stack programs if both buyers, as an example, happen to meet the demographic requirements. What type of housing does down payment assistance apply to, such as mobile homes or mobile home parks? That continues to be an ongoing conversation. That's a great question. We're starting to see it open up to mobile homes, manufactured housing. So again, that is program specific, but more and more programs are continuing to open up such inventory options, outside of the traditionally stick-built house.
Hey, Will, this is Keith again. I'm
Yes,
sorry.
sir. No, 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 please.
On the manufactured housing, I would say on mobile home parks, they're probably not going to own the land. That probably would be an issue.
Okay. This is why we have the 18. Thank you, Keith. Would you repeat the DPA requirements for non-US citizens? Keith, would you feel comfortable expanding on that a little bit?
Sure, I think it's really just going to be program specific, but I can just see from the majority of the programs that I've been tracking, which are 400, that the majority are allowing at least not, or at least permanent resident. Now, as far as non-permanent, I think you're going to run into some problems there with homestead, and that's kind of contradictory. But but there again, that's going to be program specific. But obviously, U.S. citizens. Beside that, I think you have a great shot with permanent residents, as long as all the documentation is in order.
Excellent. Thank you, Keith, and thank you for the question submission. We really appreciate everybody's time today. And if there's extra detail, I should say, to any questions, feel free to reach out to us at info@downpaymentresource.com. I highly suggest, as we talked, to hop on downpaymentresource.com and run an eligibility search in your area. If you happen to not be a Down Payment Connect subscriber or an MLS partner, just to kind of see what information is available out there. And really, as Keith just mentioned, the level at which we obtain and track this information, you will be greatly impressed. There's an abundance of resources there to help you better educate yourselves on these programs, to become very comfortable with these programs. And also, we suggest you reach out to the program provider. They are always excited to connect with either lenders or real estate professionals, so that way you all can be good stewards of their program as you're out in the community working with these home buyers. They would love a chance to speak with you and help you understand their programs. With that said, we appreciate, again, everybody's time here today, and we hope that you'll join us again the next quarter. If you go onto our education tab within our downpaymentresource.com website, you'll see where to go ahead and sign up. And actually, if you follow us on YouTube, there will be we will be posting this video again. So in case you wanted to, go back and watch it, but as mentioned, you will be getting a copy of the slideshow today. So thank you, everyone. Our team appreciates you, and we hope to see you again in the new year. All right, but let's go.